So as a retirement benefit, you got a bunch of money in your HSA, time to reimburse you for all of your medical expenses, tax-free, cash hand, and it doesn't cost you a cent in taxation. That's the power of using an HSA.
Hi, welcome to Stacks Over Tax. I'm Sterling Grace, and this is Mark Lewis. And today we're going to talk about itemized deductions for your taxes. So there's two deductions that are not itemized, but we definitely should tell you about them. The first one is the HSA.
Absolutely. It's my favorite IRS program, and I hate IRS programs. I mean, they're by and large really awful one way or another. And like I like to say, if it's free from the government, chances are it's way too expensive to accept. And whether it's an IRA or a 401k or any of these other kind of tax deferral plans, they're usually not worth the paper they're printed on. But for an HSA, it stands for a health savings account. Not to be confused with the FSA, which is what you get from your employer and stays with your employer. There's some more limitations there. The HSA stays with you. You change jobs, you go somewhere else. It doesn't matter. It's always you. The contributions you put into an HSA, tax exempt. It's 2025, so the limits that we have to be able to contribute to an HSA is $4,300 if you're single. That $4,300 comes off the front of your 1040, not taxable income. But what gets better, Sterling, is that once you put the money in, you can put it into investments, stocks, bonds, whatever your particular brokerage will allow. And any money that you make in there, no matter how much it is, like I've got an HSA, it's up, 90% in the last 18 months since I started this particular cycle. And that's all tax-free. Better than that, it doesn't even get reported on your tax income, on your taxes, because the IRS is like, that's income that is tax-free and we don't want to know about it. This all works amazingly as long as when you pull money out of your HSA, it's for medical expenses, medically necessary. So, if you want to go get a boob job, unless you've had cancer, heaven forbid, that boob job is not going to work for your HSA. But if it was for cancer or if you had some other medically necessary situation, then the money comes out of your HSA to pay for those things, including the deductible on your health insurance and no taxes. Pretty great. So what do you need to get an HSA? You have to have an exchange listed insurance policy. You can only have that policy and you can't be on Medicare. So if you're on Medicare, this isn't going to work because, Medicare always gets this pound of flesh from you no matter what. And if you didn't know that, they have I think it's a 4-year look back period. And, if you go back and you're like, oh, I put all my stuff into an LLC or an irrevocable trust, and then you die 2 years later and you've been using Medicare heavily, they'll still come take your stuff. So be careful about Medicare. You can't have an HSA on Medicare. So then you have to have a high deductible health plan. High deductible health plan means that your deduction or your deductible can't be less than $3,000. Now, some of you are like, well, that's a big deductible. Yeah, I know it is. But remember, you're going to be putting $4,300 a year into your health savings account so that if you ever did have a medical thing where you had to pay for the whole deductible, it's already in your health savings account. How's this sound so far?
Pretty good. I'm still kind of confused about what I can use the money to do. I can invest with it. There restrictions around that, or can I go out and just buy Bitcoin if I want, or do they have some rules about how I can invest it?
There's not really any particular rules on the IRS side as to how you can invest it, but there are rules on the brokerages who allow HSA. So I have mine in Fidelity, no ad for Fidelity at all, just where it happens to be. And Fidelity won't let me trade options, won't let me trade crypto, but I can trade crypto stocks and all that. I also can't short stocks. It has to be just straight purchases and things like that. So you also can't go out and do real estate with it. Fidelity won't let me take that out. In terms of medical expenses, again, as long as it's medically necessary, you're good. And what's really crazy is you can use your HSA as sort of a tax-free, no issue investment plan, kind of like your 401k, but way better. And here's why. In a 401k, or a IRA traditional, when you invest, all the stuff that you make there comes to you it's tax free. But unlike in an HSA, where the minute you pull that out of your 401k or your IRA, even for medical expenses, even after you're 59 and a half, you're still being taxed at ordinary income rates. And what does that mean? Well, that means if you're a 32% tax bracket single guy like me or higher, then you've got to be like, I made $1 million in my 401k. I'm pulling that out to pay for some medical thing, or maybe I'm just pulling it out. Then I'm going to be taxed at, well, of course, $1 million, I'm going to be taxed at 37%. But in an HSA, no matter how much money I pull out of it for medical expenses, it's always tax-free. In your 401k and your IRA, no, not so. It's going to come out and be taxed to you at nearly the worst possible rate. Worse, if you'd have just put your money into the markets and not had it in an IRA and just held I'm making it up, your Apple stock. Then if you sold your Apple stock and needed to sell it for medical expenses, you would have been taxed at long-term capital gains rate, which is the best taxation in the code. But in HSA, no taxation. And so you might be saying, well, this sounds pretty great. What's the downside? Well, there's no free lunch with the IRS. If you're under the age of 65 and need to pull the money out for something other than medical, 25% fine and ordinary income tax. So very, very bad. We do not want to pull the money out of our HSA for anything other than medical. I mean, if you have an emergency, you have an emergency. After 65 and older, then you can pull it out for anything you want. And then it acts just like a 401k, ordinary income tax. But what the secret is, there is no limit to how long you can wait to be reimbursed from your HSA if you pay for your medical expenses first with cash. So let me give you an example. So let's say you made $100,000 in your HSA account over the course of 40 years. That's pretty nice. But you've had to whittle it down because every time you use your HSA, by the way, you get a debit card. Like I have a debit card and you can go to the doctor and it just pays. It's pretty great. So every time you pay with your HSA, though, it lowers the principal in your account, which means now you can't invest it tax-free as much. But what if you never used your HSA, but kept all the medical receipts? So now you've made $100,000 in your account and you've done it without ever having to use the HSA. You just keep putting money in tax-free and it keeps accumulating tax-free. You're paying with cash. By the way, if you're self-employed, you also get the health insurance premium deduction. And if you're itemizing, which we're going to talk about in a second, you can actually write off the medical expenses you had. So 40 years later, you've got $100,000 of accumulated income tax-free. And now you get to say, I'm going to have my HSA reimburse me for all the medical expenses that I personally paid, for which I kept my receipts. And that could be $400,000, $800,000, whatever the amount that your HSA can obviously cover and should be able to cover. That money comes to you as a balloon payment on a loan that you took from your HSA. It's not really a loan. It's just that you never took the reimbursement, and there's no limit on how much that reimbursement can be and how long you can wait to get the reimbursement. Thanks so much for joining us here on Stacks Over Tax. And if you have enjoyed being with us so far as much as we've enjoyed being with you, smash that subscribe button and make sure you hit the little bell for notifications so that every time we put out a new video or any other kind of content, you're notified and you can have the great time again with us. Thanks so much. So as a retirement benefit, you got a bunch of money in your HSA, time to reimburse you for all of your medical expenses, tax-free cash hand, and it doesn't cost you a cent in taxation. That's the power of using an HSA. And when I first got mine, I was like, oh, this is great. I get to pay for all my medical. And then I went, wait a minute. Let's me pay for it, keep the receipts. And then when I retire, whenever that is, at 140 probably, I'm going to have all these medical bills that I'll have personally paid that I can extract from my HSA as a nice balloon cash payment.
Wow. That's amazing as an investment strategy.
is pretty great. And not a lot of people are talking about it. I didn't know about it until somebody on, ironically, Instagram, where we are, was saying it. I'm like, is that really so? And I went and did some research. Totally legit. And this is one of the reasons why the HSA is my favorite IRS program, hands down.
Wow, if you learned so much with us today and you want some more information about wealth strategies, make sure and check out our next video.